Hi, it's Larry Gaines from Paracycle Trading. It's Tuesday afternoon, January 29th, and I'm going to talk a little bit about Apple today and the markets and the potential for Apple and the markets moving forward from here. But before I get started, I want to make sure that you've got my free ebook, so just one sec. Now, if you have an interest in options, you definitely want to get this free ebook. It's top 15 option strategies, so just put your name, email address in there. And just go to my site, paracycletrading.com, and you'll get it right away. It's on the home page. Now, I also have a futures e-mini futures ebook that's excellent as well, and I'd like you to pick that up at the same time. So this ebook is available just under free ebooks, and you'll see day trading e-minis or day trading option futures. So just put your name, email address, and you'll get that as well. Now, first off, the Nasdaq 100 here, you can see it's really been in this consolidation phase, real sideways action. And this is a good thing because a lot of times what you'll see is, price action goes sideways looking for direction. Now, you've been holding this particular support level right here. This is like 2701, 2702. And this is also what we call a neckline of an inverse head and shoulders. So the longer it can hold this area in here, the higher the probability is that it can take the next move to the upside. Now today, was a pretty important day actually because the market looked like it was starting to roll over the last couple of days. But today it did hold above the 8 moving average, and it's holding above this 21 EMA as well. So as long as this Nasdaq can hold up here, it does have potential to move higher. There are a couple other relationships you need to keep an eye on, such as the euro currency and the Japanese yen and the US dollar. So basically, I'll show you that in just a second, but if the euro breaks out above 135, you could see these markets really take off on the equity side. But I wanted to point the Nasdaq out and this inverse head and shoulders right here. This is pretty interesting formation. You had the head and shoulders here earlier in the year. We broke the neckline, and we had this target area that it did hit down here to the downside at about 24.92. Now, when you take this head shoulder, and you've got this neckline, it's almost the exact same neckline up here. So the measured move from here to the neckline is back up here to almost the highs, and actually exceeds it a little bit. So the longer we can consolidate here, the higher the probability or potential is for a breakout to the upside, and you can start seeing a trend line starting to develop here as well. So that's one thing. Now, the other thing that caught my attention today was how well that the S&P futures held up. Here's the daily of the S&P futures, and you can see that it's really been holding this 8 EMA. So it came down today, touched it, held, and bounced up, and had a pretty nice close, and closed over that kind of magical 1500 level right here, 1500. So that's a very key close today. Now, the other thing is the power cycle model is still holding long. So this has been a big move up, but it's still holding long. And the longer it can hold this 8 EMA, and if we can get a break on the euro currency, which I'll show you next, this thing can continue higher. We've seen markets in the past where it seems like they should roll over and die, and they just keep grinding up, grinding up, grinding up. So we'll see what happens, but I wanted to point a couple of these items out to you. Now, here's a picture of the monthly chart for the S&P cash, SPX, and you can see how it just blew right through this 1476. This had been a kind of a double top there and passed through there. The next major resistance doesn't really come in until about 1427, 1428 in this zone right in here. And this is kind of where I think we're headed. Now, if we get that boost from the euro currency, then we'll get there for sure. So you can see here the highs back here in 07, 08, and then back here in 2000. So this is the next area you'll see people selling into. Any supply that was trapped up here will be, taken off, and any short sellers will try to take a stand right there. Now, let me show you the euro currency, then I'm going to finish off with Apple. Before I go to the euro, here's a very, very important currency. This has been forcing the euro higher. This is the Japanese yen, and this is a monthly time frame, and you can see how this thing has just totally collapsed. The government's been forcing the currency down to try to cheapen it to make their exports cheaper. You can see the next really support level comes in about 108, 107 in this area. So we're very close to the support area down here, and this is probably where it should find some support. So, but a lot of times you'll see markets overshoot. So pointing that out, take a look at the daily. You can see on the daily it's still grinding lower towards that 108 or 107. So I'm keeping an eye on the the yen, and then if the yen keeps moving lower and we get this euro to break above 135, we could see, that capitulation, that the yen maybe get down to that 107, 105 level, and then see what happens as for support. But now the next thing I'll show you is the euro currency, which is maybe the key to the next move of all the markets, the equity and everything else. Now here's the euro currency. This is the euro futures contract. This was some pretty good resistance right in here. You can see all this price action right through here, 134.34, and now we're broken above that. And a lot of the market's watching this 135 area, because if you break through that 135, you can see at 135 right there. We're nudging up into it right now. So if the market can get through this 135, then there's no real resistance until you really get up to about this 138 level. So it could fly up to 136 right in here very fast. And this kind of spike, there are all types of interrelationships with institutions, hedge funds, and everything else. And if they're trapped, you might see a whole different shift in the movement of money around. So more movement into the euro, and if the euro is going higher, that's pushing down the US dollar. The US dollar goes lower, commodities and a lot of things around the world are priced in dollars, so that's going to push the equities higher. That's the usual relationship. So keep an eye on this euro. Now here's Apple. Here's a weekly chart of Apple. You can see I've got these various support resistance levels drawn out. The big support's down here at 428. And I was thinking maybe we'd get down there, this week, but we did stall out and popped, Monday and Tuesday. Now the next support level's right here, 445, and then this 458 level right here is about where Apple stopped today. Now, if it can break through this 458.66, this level here, then you've got the next area is 465, and then you could get up here to 485, pretty fast. So you could dip your toes in here a little bit, and tomorrow if you see it closing above this 458, then it's a really good higher probability bet. But right now, to get in a little bit early, define your risk is not a bad play. Now a couple different trading strategies to do that. Let me pull up the daily real quick. Now here's the daily chart of Apple. Not a lot. There was fall through, and it did close higher today, but you had to open and close at the same level. So there's uncertainty here. This is a doji, so it could easily fall back over to tomorrow. But if it does hold in here, then you've got the 382 retracement from the high back here before earnings to this low, and it's amazing. It comes in right at the high from last, I believe it was Friday. And that comes in at 465.63. So tomorrow you could see this thing pull back. Maybe it holds in here. That's 455. It needs to hold around 445, that area, 455, and then you could see it, push back up here to this 382, which is the first level that markets usually will retrace to. And then if it can get through the 465, you could get it all the way back up here to the 618, which comes right into this level I showed you earlier on that monthly chart, which is 483. So got a couple levels here to play with. The 465, get through that, and then if it get through that, I think there's a good shot at the 618, right there, 484. So a couple ways to play this, and let me show you those particular trades. Now a couple things. If you look, this is the option chain for Apple expiring this Friday, the 1st of February. If you look at the open interest, you've got highest amount of open interest is to the call side at the 470 strike, about 9,000, almost 10,000 contracts. And then on the put side, the largest amount of open interest is right here about the 450 strike. So right now it looks 450, 470, and you even get some pretty good volume up here at 475. So looking at this, there's a good probability that we can get through 465 and retest back up here 470, even maybe 480. If you look at the downside, puts are less to the downside. Now, one more thing of interest: if you look at the 500 strike, if you recall last month, the monthlies went out pinned at the 500. It had all the volume on the calls and also on the put. So for pinning action last month, it really paid off. The open interest was highest at the 500 and highest at the 500 on the puts. Now this is the February contract, and you've got the same scenario lineup. So very interesting there. So that might tell you that this thing could gravitate back towards 500. That being said, and the other things I showed you, one possible trade by the options expiring next week gives a little bit more time and keeps it cheap. Buy the 465 calls, sell the 470 calls. That's a $5 spread. You can get into that about $1.60, 70, something like that. And then if you want, what I did was to buy this spread, and I sold out of the money. I sold the 500 calls against it, so I got into the spread about $1.25. And the theory being that the theta, if this thing just doesn't rocket up and just kind of grinds up, but at least gets over the 465, 470, then this will expire worthless. So that's one trade. Now the other trades to look at would be bull put credit spreads, where you sell an out of the money put and then buy one put below it. And typically what you want to see on that, you might look at next week or this week for expiration, because you also get the time decay. You want kind of a 1-to-1 type of ratio. So you want to collect, if you're doing a $5 spread, you want to collect about $2.50. Then your stop loss, you'd want to do about 50%. So if it goes against you by up 50% of that $2.50, then that's where I usually will place my stop. So that would be a stop loss of about 375. So that's another way to do it. Now if the market doesn't move at all, that spread pays off better for you because of the time decay. So good luck trading tomorrow. Now before I tone out here, please check out the bottom of the email I sent you. We've got a lot of things taking place at Power Cycle Trading, and I've mapped out a lot of the different events that we're having coming up in February, and a lot of good stuff. We'll be having a webinar coming up on February 13th at 7 Central to go over the Thinkorswim platform, and I think that'll be a really great event for you guys. But there's more information on the on this blog email. So any questions, just send us an email, and good luck trading.